Vice President Marketing, Mr. Sushil Batra, CFO, Mr. Vikas Tak, Company Secretary. The management will give a short brief about the results, and then we can proceed ahead with the Q&A sessions post that. Thank you, and over to you, sir.
Good afternoon. I am Sushil Batra from Relaxo. Ladies and gentlemen, thank you very much for attending our earning call for the Q2 FY21. We have already shared our earnings press release and result presentations. Hope you got an opportunity to go through that. I will start with the Q2 FY21 financial performance, followed by H1 FY21 financial performance. In Q2 FY21, Relaxo booked an operating revenue of rupees 576 crore as compared to rupees 622 crore in the corresponding period of the previous year. The drop in revenue in Q2 is due to disruption in economic activity caused by COVID-19 pandemic. Benign raw material prices and saving in administrative expenses led to an improvement in the EBITDA margin to 22% as against 16.8% in same quarter last year. Other income stood at rupees 5 crore as compared to rupees 2 crore in the corresponding period of previous year. The increase is mainly on account of lease rent waiver obligation of rupees 2 crore agreed by lessors for our rented premises. Profit before tax was rupees 100 crore for the quarter, up by 35% year-on-year with a PBT margin of 17.4%. Tax expenses for the quarter and half year ended March 30th, 2020 reflect changes made by Taxation Law Amendment Ordinance 2019 as adopted by the company. Therefore, effective tax rate of quarter ended March 30th, 2020 is not comparable with previous comparative period of September 30, 2019, as the company had recognized the full impact of this change in profit and loss for the quarter ended March 30th, 2019. Profit after tax at rupees 75 crore for the quarter is up by 6% year-on-year with a PAT margin of 13%. For first half of FY 2021, we registered a revenue of rupees 939 crore as compared to rupees 1270 crore in the corresponding period of the previous year. EBITDA margin increased to 19.6% from 16.6%, while PAT margin increased to 10.6% from 9.5%, helped by favorable raw material prices. At the end of September 30th, 2020, we have 396 exclusive brand outlets which contribute around 5% to our H1 FY21 revenues. We have added net 6 new stores in this period. Export are also picking up with opening of markets and are contributing 4% of revenue. Going forward, we are cautious about the recent rising trend of raw material prices. We would continue our effort to grow our presence in untapped and underpenetrated market and focus on strengthening our brands. We can now open the floor for questions answer. Thank you very much.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Archana Gude from IDBI Capital. Please go ahead.
Hi sir, thank you for the opportunity and congratulations on good set of numbers. I have 3 questions from my side. So firstly, I would like to know how was the demand scenario in Q2 and some color on the brand-wise performance for us.
Yeah. So see, after the opening up of northern markets, like Delhi was the first one to open up. So in Q2, we saw a good demand picking up from the rural India. So, and if you see brand-wise, the Sparks category, which consists of closed footwear majorly, there has been an impact there. But in open footwear, we are getting a good demand for the Hawaii brand, the Flight brand, and the Bahamas.
Sure, sir.
So there is a good demand coming in open footwear, because the second thing is work from home is also happening. So there is more demand of open footwear and less for the closed shoes. Similar trend in quarter 2, yeah.
Sure, sir. So I was just going through our presentation and it suggests that we don't have a presence through EBOs in southern India. Your comment on this, sir, like how we should look at it? Is that intentional, or how you intend to grow in the southern market?
EBO.
Outlets. Okay. Our purpose of EBO is a little different, strategic one. Where they are a kind of display cum exhibition and sale counters, where our purpose is to capture the voice of the consumer and accordingly develop the new product so that we can understand the evolving need of the consumer about our current products, the new products that we are being launched. And so currently we have around 400 outlets, but that's enough to understand the market. But if you want to go to south and west, then it is a different thing. Till commercially this becomes entirely more economical sense. Today it is serving us a marketing sense, where we understand the market. So from that point of view, our objective is being well met with. So currently we don't have any plans to have such kind of outlets in other parts of the country. That's it.
Sure, sir. And sir, some guidance on the raw material prices trend and what kind of sustainable EBITDA margin you look forward, let's say for FY21 and 22?
So far the raw material prices have been quite, I'll call it, benign. In the fourth quarter, that is January, February, March, there definitely the prices are changing and things will be different. So we have to wait and see how actually the things fold up. And then we will decide the way things are.
Mm-hmm. Sure. And sir, just follow up on my last question. Given the category of footwear we are into, is it really easy to pass on any price hike if the raw material prices go up, or how we look at that situation, sir?
That depends upon what kind of price hike or what kind of prices have changed in the raw material. In case of nominal, we don't want to intervene at that stage. But if there is a major, then we do review the costing of our products, and then quarterly, then we pass, and then it is not difficult. Any price hike based on genuine input increase is never questioned. It is only when we want to increase the price without any genuine reason, then that is questionable. So that is our policy which we have been following in the whole history of Relaxo, and that will continue to follow.
Sure, sir. So thank you so much and all the best.
Thank you.
Oh.
The next question is from the line of Ritesh Gupta from Ambit Capital. Please go ahead.
Yes, sir. Thanks for taking my question. So just continuing on the RM and the gross margin bit, we have seen some of the best gross margins being posted in this quarter. I think much better than what you have reported in a fairly long history. So would be attributed to the crude price kind of collapsing and kind of that coming to your benefit. And is there any price hike? I think I remember you had about 2-3% price hike a few months back. So is it also kind of impacting? And just remind us on what kind of pricing action you have taken in the last 6 months or so, if you have any. And because I think gross margins is also not understandable in the sense that the closed footwear are reasonably weak, and probably it might have had some impact on the mix as well. So just want to understand the gross margins a bit, and if there is any one-off in these numbers.
The current situation what we are in, now things are a little changing. In the first 6 months, there were marketing expenses were controlled. Other administrative expenses we had controlled. Now when the market starts opening up, then we'll have to do more expensive marketing, sales promotion, brand building and all that. And They were saving on travel expenses. They were saving on other administrative expenses also. And raw material also was quite comfortable pricing. Now, on the one hand, prices will also raw material go up, and our travel expenses and marketing and brand building, everything will go up. So this, whatever we have achieved in quarter 3, doesn't mean it is going to be the norm of the day. We have to be in the market in a competitive manner, and accordingly we have to take all kinds of our decisions what we are in. So as far as third or fourth quarter is concerned, since now expenses will be more, so this kind of EBITDA margin we should not expect. Margin will be good, better, but it will be in a more reasonable manner. And let us wait how the raw material prices we come to know in the fourth quarter of it. Accordingly, if whenever some intervention of price increase is required, then we will do. We have to review quarter by quarter what are the price of the raw material, other inputs, market scenario, competitiveness of the articles in the market, and then we have to take a mature decision on that. That's it.
Understood, sir. And if you could just highlight, was there any reduction in discounts, etc., you did in the last quarter, given probably your competition may be facing supply side challenges? Or
yes,
that's
definitely. No, you are correct. Definitely, in trade level also, the discounts offered were low, and same thing happened in ATL and BTL expenditure also. It was not there in quarter 2. So now everything is started in quarter 3. Be it advertisement, BTL, ATL, and the promotion scheme for the distributor and retailers.
Understood, sir. And just would you be able to guide us on what kind of volume growth you saw in this quarter, if at all you can disclose?
Just a moment.
What's your question? Volume growth.
Volume.
Volume growth is around overall 3%, 3 to 4% at company level.
Okay. So basically you had a mixed decline because of which your top line is, let's say, 7% decline, but actually you had a volume growth.
Volume growth is 2%.
Understood, sir. Understood. And sir, I mean, in terms of any benefit that you're seeing from COVID on a long-term basis, like, because I'm sure at the lower end of, let's say, your slipper portfolio, there are many unorganized players as well. And I think have you seen any kind of disruptions on that side, any opportunity to gain market share? Do you see that?
Yes, actually what has happened because of COVID, work from home culture is here to stay. So the demand for the slippers and open footwear category will maintain at least for 1 to 2 years what we are seeing. So and the outgoing party wear is reducing. So for us, we make informal footwear and preferably open footwear. So I think for 2 to 3 years this will continue.
Understood.
The demand will be more. Yeah.
And if I can squeeze the last one, I mean, on the export side, I think last call you had said that you are looking at exports much more aggressively and you are looking at a couple of global markets as well. I think you made this comment, I think in AGM or probably in your last call. But just want to understand, is there a thought process on any specific countries you're targeting, or any competitive advantages that you carry with yourself in those export markets? So if you could just talk about that would also be helpful.
See,
you can answer. Ritesh.
Yeah, I'm Ritesh Tuva. In export markets, this has been a similar position like India only. Like after COVID, the market has been affected in the same way, international market also. And as far as, what's your other question you're asking?
No, I just wanted to see that what is your competitive advantages as you get into some of the other markets?
See, what we do, we have been exporting in our own brand name. So that is helping us out because that we are getting sustainable growth year on year. Because of using our own brand, the maximum footwear industry, where I talk about China and other countries, they always provide the products in the private label. But we are doing in our own name, own brands, so that is giving us advantage for the future.
Got it.
And the markets we are focusing, majorly we are focusing on Gulf markets, which is a major market for us. Side by side, we are getting now traction from Africa region and Oceania and Central America. These are the 4 regions where we are getting traction from. Seeing our products.
is it that you are able to provide these products at cheaper prices to even, let's say, what your Chinese or Bangladeshi competition would be? I don't know which countries are the larger competitors.
Actually, what we are doing is our quality standards are whatever we are maintaining in India, we're following the same quality standard wherever we are entering into. Right? So our price points are higher than the Chinese counterpart, wherever we are selling. But we are able to get the sales seeing the quality standard, what we are maintaining.
Understood, sir. That's very helpful, sir. Thank you so much.
Thank you. The next question is from the line of Nihal Jham from Edelweiss. Please go ahead.
Yes, thank you so much, and good evening to the management. Sir, three questions from my side. The first one was, if I look at your recovery, be it in terms of volume or revenue for this quarter, it has been maybe better than a lot of the other similar categories. So I, first of all, just wanted to get a sense that at the end, dealer or retail level, is the growth in volumes and revenue similar, or there has been a channel filling which has helped improve the reported numbers, at least at our end?
Can you repeat the question, please?
Yes, sir. Am I audible to you?
Yes.
Yes. Sir, I was asking that when I look at your revenue degrowth of just 7% and even the volume growth of 2%, the recovery has been much better than anticipated. So I just wanted to get a sense that is the recovery at the end dealer level also similar, or there has been some sense of increase in inventory in the channel because that may have got a little reduced because of limited supply initially. So that is the first question from my side.
See, both things has happened. The pipeline got empty in starting of quarter 2, and secondly, there is a high demand coming from the Bharat or rural India, what we call. So demand for open footwear is quite high, and definitely availability has improved from our factories, and it has helped us to grow. It's similar with the retailers and distributors.
So our end tertiary sales or end level sales would be more or less similar to the company reported sales at this point in time for Q2?
Yes.
That's helpful. Sir, I'm not sure, but do you disclose your share of e-commerce and approximately what was the contribution for this quarter?
The e-commerce, we are doing 10% of our total sales, if you say quarter 2. But
Yes.
quarter 1 it was all closed, so there was no sale coming in quarter 1. So quarter 2 is 10% growth compared to last year, quarter 2.
A 10% growth, and as a share of our total sales, what would be e-commerce contribution?
It is also 10%.
That is also 10%.
Okay, sure. And last question from my side, sir. Traditionally, if whenever we've seen a spurt in, say, gross margins because of falling raw material prices, ideally, how do we end up, using that benefit? Do we end up cutting prices or end up increasing our ATL, BTL spends? Just wanted a sense of that scenario in case it plays out ahead.
We have to see a little longer duration of time. It is not in 1 month the prices go down and then we have to take some radical decision. We have to see how this 3 months or 6 months plays out. If I find today raw material gone down, but I find in the third quarter they are going to come up, then we'll average out and then find out. So then we have to take a decision. By and large, if we see a period of longer, 6 months or more, then things average out. So no immediate intervention is required for any kind of things.
Absolutely, sir. But I'm just saying that in case, say, there is a sustained continuation of the current gross margin, then would we, say, look at reducing prices or would we look at increasing?
Sir, already I have told you, quarter 4 raw materials are going up. We have booking the material at a new rate, which are quite high. Rather, it is a situation other way around. I don't know, in the quarter 4, we may have to look for upward revision of the price.
Sure. I take that point, sir. I'll come back in the queue for further questions.
Okay.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Hi. Thanks for the opportunity and good evening. Sir, you spoke about channel-wise split of the growth. If you can give some color on region-wise also, if any particular region or South India in particular did better than others.
So South India and West India, they did not pick up because, as everybody knows, Maharashtra was last to open up. Similar, Kerala is still under lockdown. So South India and West India is hardest hit. So the best part for us was we have done very well in North region and East region, which was less affected and opened up quite early.
Mm-hmm. And then sir, growth is so South and West will be materially deep into degrowth versus our reported numbers, or they are in vicinity of reported numbers?
So they are in degrowth, no doubt about it. South India is in degrowth because they're last to open up, and Sparks also being highest there.
Okay. So second question is, you spoke about that we were able to actually make stuff available versus competition, and I'm assuming, as we have noticed in many other categories, that unorganized had a much more supply shock than organized players. So would it be fair assumption that you would have gained market share in the last 2 quarters versus unorganized, and once they stabilize the supply chain, perhaps the competitive pressure might come back in coming quarters?
Yes, you're right. Initially, we got a good market in those first and second quarter, but now the supply is coming from the competition, so that competitive edge is not as relevant what it was before.
Sure. And so if you can give some color on how the festive season is going so far, how Durga Puja was, and when do you see recovery coming back fully for us and for the sector at large?
So October has been nice for us, and the festive season picked up. Now all the markets are open except Kerala, so we are getting good. Recovery is there. Good recovery is coming. Yeah.
And this is across strata, in the sense you spoke about Bharat versus urban. So if urban is also participating now?
Yes, definitely. Everywhere across.
Okay, great. That's all from my side, sir. Thanks.
Thank you. The next question is from the line of Dhaval Mehta from ASK Investment Managers. Please go ahead.
Yeah, good evening team. Congrats on a decent set of numbers. So my first question is with respect to category growth. So I understand there is no data, but any ballpark number, what would have been the category decline, let's say in Q2?
One of the categories which are not grown or rather decline is canvas shoe. Schoolmate.
Okay.
Because schools are closed, canvas shoes, school related also, otherwise also, and closed category, whether it is sports, because people are not moving out, so that category has affected. But other articles like whether in open footwear, slippers, sandals, they are all right. No, not an issue.
So normally shoes as a category is how big in terms of overall footwear?
Around 10%.
Okay, including formal sports shoes and canvas shoes.
We don't have formal, we are all informal.
No, not ours, but I'm talking about the category as a whole.
A category for the country or for us?
Yeah, for the country, for the industry.
No, I can't say. I can't tell on that. I can tell about my company.
Okay. So my second question is, you told that open footwear is doing well. We know that. We understand that open footwear as a category is doing quite well. And normally earlier, open footwear used to be more of a seasonal category where it largely used to sell more in summers. So now, let's say in summers will be approaching fast. So can there be any manufacturing glitch because the demand will be much higher so do we have the capacity to manufacture the increasing demand if it comes?
Yes, we have.
Yeah, we have a good capacity. Always we have a capacity cushion of 30-40% more. So that will not be an issue.
Okay. And my last question is in terms of overall dealers. So for dealers, it would have been a very difficult time in last 6 months. So have we seen any of our dealers close down, or any thoughts on that?
See, I'm telling before also that in West India and South India, there has been a big problem because of opening up late. So many shops have closed, but it's still difficult to say what is the exact number because as you know, Kerala is still under lockdown and in Bombay also it's been majorly hit. So we don't have exact data right now, but definitely there has been some closures. Retail outlets. Wholesale. But in terms of the channel trade distributors, they are working.
They're intact.
They're intact, yeah.
So the retail universe may come down, but for us, the channel distributors are same. Still, they have not declined, right?
They have not declined.
Okay, sure. Thank you, sir, and all the very best.
Thank you. The next question is from the line of Sabyasachi Mukherjee from Centrum PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. I have a couple of questions. First is, if you can help me with the total numbers of units sold in H1. I believe in FY20 you have sold around 18 crores pairs of shoes and shoes, slippers both. What is the number in H1 this year?
We can tell you revenue for the half H1, which was this year that has been 939 crores.
Number we generally share at annual level, sir. We can share the value part, but yes, number we share at balance sheet annual level, not half yearly or otherwise.
No issue, sir. Can you just help me with the volume or volume growth in H1? You mentioned 2% in Q2. What would be H1?
H1 is minus
13%.
Because quarter one was almost closed, or 2 months were not working.
Right. Thank you. Then, so my second question is, any sense on the margins of open footwear versus closed footwear? Is open footwear having more margins, or any qualitative sense if you can help us?
Yes. Okay. No EBOs, no, yeah.
Yeah. And sir, in terms of the capex, you've already mentioned that you would be already doing 100 crore capex this year as well. This capex you do, how much capacity you get additionally out of that, and so won't it be suffice for the next 2-3 years then, and then we can stop for the capex?
Every year after all, company has to grow, and we have to keep on seeing which way, what category, how it has to be grown. There are certain expenditures like molds. It is a regular capital expenditure. Then machineries. Lot of machinery get replaced also. And then there are third thing is this capacity expansions. So capacity expansion also has to be done keeping in view the evolving or increasing demand of the different types of footwear. So whatever category is growing, accordingly we keep on moving ahead of the curve. Not that today demand will come and then we'll start planning. Just always create some system or cushion in the manufacturing capacity so that we should not suffer any sale losses.
Sure, sir. Thank you, sir. That's all from me.
Thank you. The next question is from the line of Ankit Kedia from Phillip Capital. Please go ahead.
So just wanted to understand the impact on Sparks brand. It accounts for 30% of our revenues. If to understand that now from quarter 3 we can see demand being to pre-COVID levels with Sparks, or we will see demand only in quarter 4 and some pressure can be seen even now?
It's very difficult to say about quarter 4, but we are seeing some recovery in Sparks brand as well. But I'm saying again, West and South not fully opened up. There's still some issues at district level. So recovery is there, but when it will be recovered to pre-COVID level, difficult to say right now.
Sure. And sir, related question to that is on the school shoes, canvas shoes as well. Are you seeing schools reopen in certain parts and demand for school shoes coming back, and that can be a big demand boost for us in the remaining 6 months of the year?
No. We have not got any demand of school shoes. So very difficult to say right now anything about that.
Sure. And sir, my last question is on the A&P spends. Could you quantify your A&P spends in the first half of the year? And what is the and in that light, what is the margin guidance for the full year, given that previously we believed that the margins could be flattish year-on-year at around 17%. Given the stupendous margins in the first half, do we see 100 to 150 bps better margins compared to last year in FY21?
Yes, compared to last year, we will have definitely better, but we should not take quarter two as the standard. This in quarter three, quarter four, expenditure on account of marketing is definitely going to increase. Trade margins or maybe schemes for the distributor channel will also be there. So, but on the whole, what we see that this year our EBITDA margins will be better than last year.
And sir, if I can just squeeze in one more question on the EBO demand. Sir, how was the EBO demand, and for the full year, how many more stores are we looking to open?
Sir, we are controlling at around 400 for the time being.
Okay. And so is the demand similar to the wholesale demand at the EBO, or there is some pressure on that as well?
No, there is a pressure on that because visit to our own outlets remains affected. But in multi-brand outlets which are located in all areas like rural and sub-rural and urban suburban markets, their demand is better.
Sure. That's helpful, sir. Thank you so much.
Thank you. The next question is from the line of Nikunj Kala from Principal EMC. Please go ahead.
Good evening, everyone. So my first question is, if we do a capex of 100 crore, what is the average gross asset when we look in any capex going forward?
I'm not very clear on the question.
Sir, if you put 100 crore of capex today, so what is the revenue potential from that facility we can expect?
Sir, that depends upon where you are putting the capex. Suppose capex goes on buying land, no capacity will change. You put capex on building, no capacity will change. And you put on the machinery, what kind of machinery, what category of machinery, whether on mold. So it is difficult. Every capex doesn't mean it will come out with the more capacity.
Okay, if I may ask the question as if we are doing any greenfield capex today, and whatever capacity you have in mind of a particular line, and then in that the gross asset turn one can expect from that.
Sir, I have not gone like that because our categories like slippers, sandals, sports shoes, and EVA slippers, EVA injection molding. There are so many categories. Then what kind of process we are going to adopt? Whether I am making shoe on a conventional category, or I will make a raw material and then make a sole out of it. Then I will also make upper out of it. It will be different paradigm. What kind of policy I follow? One thing is you buy the sole and upper and put it. It will be a different output. But if you make the sole also yourself, you make the upper also yourself, then output will be different. Capacity creation. Understand?
Okay, sure.
So it's not as simple as that what you are saying.
Okay. Yeah. Thank you. Thank you, sir.
Thank you. The next question is from the line of Abhimanyu Thakkar from Trust Portfolio. Please go ahead.
Hi, sir. Sir, I just wanted to understand, have we tried consolidating our supply chain, where earlier retailers had an option to choose amongst 3-4 distributors versus now there are exclusive distributors in the West, especially I'm speaking.
In last 6 months, there is no change. We are continuing what we were doing before. So in COVID time, we have not changed anything on that structure.
No policy shift.
Yeah.
So, sir, so where I'm coming from is because in some of our channel checks, we realized the availability of sizes is an issue at the MBO level, wherein the distributors cannot stock all the sizes for all the retailers, and hence we are losing out some customers due to this issue. They are not getting all the sizes. Earlier, we had a distributor, 3-4 distributors, so they could approach, if A distributor doesn't have it, they will approach B. So just trying to figure it out, where we are trying to miss out on the channel changes?
There are pros and cons of both the policies. In some areas, we have distributors where they are dedicated and it is one distributor giving to the retailers of that area. In some of the markets where the one distributor is not able to do, then we have another distributor also. So there is pros and cons. Wherever we are able to serve the market through one distributor, we are doing that. Where it's not possible, there we are having multiple distributors. That is what we are doing.
Okay, sir. Because the area where I actually spoke to, because there was actually an issue with the availability of sizes. So I thought I'll just convey it to you, in respect of the loss of customers.
I know. This problem is with practically every distributor. Because whatever finance money they are able to put, sometimes they are not so organized that they are able to keep inventory of every article, every SKU, every color, every size. So as a result, they do have sometimes shortfalls, and we try to prevail upon if they should maintain some inventory. But presently, sometimes it does happen. They have no stock of some articles.
Okay, sir. Thank you. That's it from my side, and wish you a happy Diwali.
Thank you.
Thank you. The next question is from the line of Mithun Soni from GC Investment. Please go ahead.
Yeah, thank you very much, sir. One question based on the question what the gentleman asked. Sir, how connected are we in terms of technology with our distributors? So what is our replenishment cycle for the distributors on a normal period, and can we see it further improving?
If you ask about this 6 months which have passed, we have not changed any policy in terms of supply chain or addition or subtraction of a distributor. You're talking about supply to the distributor. Is generally we try to maintain 2 to 3 days across India. And for connectivity in terms of stock, we have implemented DMS, so we know what is the secondary sale and stock level at all distributor.
So we supply them not for 6 months, but on a regular basis we supply them in 2 to 3 days.
Yes, that is our norm.
Okay, and so normally the reason for the stockouts will not be as much, right, for distributors, because if we are able to supply them in 2 to 3 or 4 days on a regular basis, excluding this problem.
Yeah, but we ask the distributor to keep at least 1 month of inventory. Okay. Because of having all the sizes and colors,
Okay. But sir, then how do we help them improve their ROIs? Because that is a very important issue for our type of business where the number of SKUs are so high.
So we have installed DMS at all distributor points. So we get the stock data and the secondary sales data. So whatever stocks are getting accumulated, we come to know, and the billing is top for that, and the secondary, our salespeople are able to help him liquidate that stock which is stuck. So we keep on monitoring what stock level distributor is carrying.
Okay. My second question, sir, is then for this quarter, 6 months, I'm seeing our inventory and receivables has come down quite a lot. Like the inventory coming down, is it just because of the value of the inventory has come down, or we have made some changes over there?
So as soon as we opened up our plants in May, so there was a huge demand coming for open footwear. So whatever inventory we were carrying forward in month of March got exhausted in just 15 to 20 days. And to ramp up the production, it took time for 1 to 1.5 months. In that period of time, the inventory went really low.
Okay. But sir, now this is when we are talking of the September end. So this 3368 crores of inventory is as on September 30th. So which is much
because the demand of open footwear is still very high, and the production, there is still a gap, demand versus supply, in some product categories.
It's a particular product category.
Yes.
Okay. And so one last question. Over the next 2 to 3 year period or 3 year period, what is the sort of gross margins or EBITDA margins we should look at the company aspiring so that is able to grow, invest, and generate good amount of free cash?
It is depending upon market conditions, demand conditions, what kind of scenario we are in, what kind of product acceptance is happening, what category we are focusing on. Generally, if you see in the last, it has been around 16%.
Correct.
And this quarter it is there because of certain reasons. But if we are able to achieve 18%, it should be a good one.
This is over
But we have to remain competitive also, and we have to, we have to remain competitive also.
Correct, sir.
And we have to be, remunerative also at the same time on the back end.
So this 18% is over next 2 to 3 year period, or in a short term you are talking?
I will talk of this year.
Okay.
Then I will talk next year, because we are in a very volatile time at the moment. Nothing is certain as such. Today, even our COVID incident is not over. Fear is not over. It is. We are in a very, uncertain time. Let things, some certainty come, and then we will be able to say with more confidence of what kind of scenario is emerging.
So my last question on this: if you see today, excluding the employee cost, is in the range of.
Sorry to interrupt you, sir. Mr. Soni, may we request you to please join the queue again, because there are participants waiting
Sure.
for their turn. Thank you so much. The next question is from the line of Aditya Bapat from Equentis PMS. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I have two questions. Firstly, I want to know, what do you see as a medium-term, target for the contribution of e-commerce to your total sales? You said that it is close to 10% currently. So where do you see it, say, about 2-3 years down the line?
It should increase at least by 2%. We are expecting 10 to 12% will be the contribution of e-commerce. We are targeting that.
Okay, this target is for the next 2 to 3 years, right?
I'm talking about next 6 months to a year. We can't see beyond that right now.
Okay. So then, having said that, do you think that not just for you, but for the industry or rather the organized players as a whole, the margins could come under pressure because this overall e-commerce thing or the online thing is inherently lower margins?
No. Actually, we give same margins to channel trade and e-commerce. So we are not keeping any gap between e-commerce and the channel. We keep it same. Otherwise, there will be a problem of discounting.
Got it. Okay, sir. That's it from my side. Thanks a lot and all the best.
Thank you. The next question is from the line of Ashish Kanodia from Ambit Capital. Please go ahead.
Yeah, thank you for the opportunity, sir. The first question is, you talked about that, once the market opened up, there was a, significant pent-up demand and production took time. So was there any loss of demand, demand, or did you fail to meet any demand during 2Q?
Yes, definitely, because the demand was quite high compared to stock what we were carrying, and it took time for factory to ramp up the production. So that time definitely we lost some sales.
Fair to say that, had there been no loss of demand, recovery would have been, say, at least 5-7% better than what you reported?
Not that big.
Not that big, yes.
No.
Okay. And secondly, sir, I understand that, with marketing opening up, you will start with, so most of your expenses will start going back to pre-COVID levels. But have you looked at any cost rationalization in terms of any line items where you see structurally over the next 3-4 years, you will have lower cost versus what there was during the pre-COVID period, and hence you will see some margin expansion from those particular line items?
Our marketing costs were low on this first quarter and little second also. But third and quarter, it will now come back the way to pre-COVID level. After we have to continue building our brand. We have to continue now. Our people will also start traveling and expenses will start going. And all these things will be there. Now, As far as raw material expenses are concerned, that will depend upon what kind of international commodity behaves.
Okay. And fair to assume that all supply-related and labor-related challenges are now over, and I mean, at least productions are almost back to pre-COVID levels?
Yes, but in certain category, like shoe, now because there was no demand, and now only demand has started improving. So there now we are ramping up the things, and some manpower training is going on to improve the production levels.
Sure. Got it. That's all from my side. Thank you.
Thank you. The next question is from the line of Tejas Shah from Spark Capital. Please go ahead.
Just one clarification. First, you mentioned that 20% of our footwear or 10% of our footwear is closed footwear. So which number one should refer to?
Can you repeat the question?
We mentioned 10% of our total footwear will be closed footwear, right?
Yeah.
And
so
Sparks will
be required.
Sorry?
No, I got it. 10. If you to go on a volume term, it will be around 10%. But in value term, the value will be 20%.
Okay. And sir, when we see Sparks as a brand, which is somewhere around 30% odd number as per our disclosure in the past, so is it a fair understanding then if 20% by value, somewhere 70% of our Sparks itself will be a closed footwear?
No. So what I have told you, it is regarding closed footwear shoe. But in Sparks, there are also slippers.
Yeah.
So we have to, not as a brand I am talking. I am talking as a category of the article.
Yeah,
so sports shoes and sporty sandals, that constitute 20% of the turnover.
Okay. Now, I was just trying to deduce that Sparks will be somewhere around majority closed footwear brands.
More than one-third, yes, we have already been saying that. It will be more than one-third only, now also.
Okay. So second question, we have been hearing you for last 6-7 years, and you have been pretty consistent on your margin commentary that you want to be competitive and you want to react to, or rather respond to market situation rather than proactively chase margins. But during this journey, we have expanded margins also from 12% to 17-18% now, and obviously there was a one GST benefit also in between. But just wanted to understand the philosophy. What do you benchmark your margins against? Is it against the peer, or margin is an outcome and you want to be competitive on pricing and you let the margin flow through whatever it comes to? So is it a goal seek in the pricing, or pricing is main focus of the product and margin is an outcome that is not under your control?
No, focus is the consumer. First, we have to understand what consumer is looking for. And we have to first of all satisfy that need. And consumer is looking for what and at what price. So we have to make articles accordingly. And then everything goes back into it. And if we are able to serve that need, then we are able to expect good margins automatically out of it. But if you supply a ill-fit product, you will not expect those margins at all. Rather, sometimes you will have to sell those articles at a loss. So we have to always keep close contact. What is the evolving need of the consumer and set right to develop such products only. Then only company will remain healthy and will have better margins. So that lesson we are learning, and we are improving our portfolio accordingly.
Sure, sir. That's visible. And sir, any A&P as a percentage of sale as a philosophy that we want to plow back every year?
A&P, there are various components in it. One way could be brand building, another could be giving discount, third could be giving gifts. There is a whole plethora of things. And this keeps on changing from quarter to quarter, time to time, depending upon the market condition, company strategy, and so many other factors. We can't say this is my philosophy will remain forever.
No, so I was asking from long term, that 5% of sales or 6% of sales,
we should always see the market and keep on being flexible. We should not be wedded to one rigid philosophy. We have to be active on it.
This helps a lot, sir. This helps a lot. Thanks a lot and all the best, and happy Diwali to all of you.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, this will be the last question, which is from the line of Samir Gupta from IIFL. Please go ahead.
Thanks for taking my question, sir. I have only one question, just trying to understand the results in a little more granular level. So we had a volume growth of 2% this quarter and a sales decline of 7%, and this gap is even despite lower cash discounts, lower trade spends and promotions, and so on. And just trying to understand why there is such a big gap between volume growth and sales decline. Is it mix? And if it is mix, then it has actually benefited our gross margins. So just a little more color on this number.
Yeah, it is a result of the mix because closed articles have sold less and open articles have sold more. And because and in that what called open footwear or slippers or other things, there our one division, the Bahamas, has grown much more. And there we have been, they are at a premium category, so our margin has been better in that category. As a result, things have improved.
Just to follow up, sir. So, is it that the realization in closed footwear is high, but on a margin level they are lower than open footwear? Is this understanding correct then?
No. In every category we have different articles giving different margins. So, whether it is Hawaii category, Bahamas category, flight category, sports category, in every category we have some premium articles and we have such call it value for money articles. So every category has to be like that, and that is there.
Got it, sir. Thank you. Thank you so much for taking my question, sir.
Thank you. As this was the last question for today, I would now like to hand the conference over to the management for closing comments.
Thank you all for joining the call. This is all from our side. Looking forward to join you again at the year end. Thank you very much.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thanks.